All right, welcome back to Mortgage 101, your guide to homeownership with Clinton Wilkins and myself, Todd Veinotte. Hopefully you've gotten a lot of good information out of this so far. I know that we certainly enjoy doing it. And we're going to talk, first, we got a couple things we're going to get to this segment, but we want to talk about the market itself. What are you hearing from your realtor friends, and you would have many of them, about the local market right now?
Well, there's definitely more listings.
Yeah.
A realtor that we've had on our show, James Dwyer, he put out a tweet the other day that there were 30 new listings on Monday, which is up from like an average of like 5 or 6 a day.
Yeah.
That was last Monday.
30, usually there's been 5 or 6.
5 or 6. So
yeah.
There's been a spike. His hypothesis is it's people that have bought homes in the last couple of years that are now listing them. I don't know if that's 100% true. I don't know if that's 100% true. I don't know if there's enough data yet to back that up.
In some cases.
I think in some cases, yes, there will be.
Yeah.
I think in some cases, if people did shorter-term fixed, if you're in a variable, if your employment changed, you're maybe listing your home, especially if you bought this prior to 2020. You probably have some equity.
Yeah. I visited some friends in the Spryfield area, which I live in the Spry, but there's a large subdivision off Heron Cove Road, and there's lots of big subdivisions.
The new construction?
The new construction, all new construction. And they're nice, kind of sleek, modern-looking houses, kind of 3-level type thing, the whole thing. But they're looking and getting $700,000+ for those units. And I'm not saying that that's overvalued or anything like that by any stretch, but it seems to me that's kind of and I don't like to say middle income type area or whatever, but it's not an affluent area. Let's put it that way. And it wasn't all that long ago. A $750,000 home was.
You would be getting a mansion in Halifax.
Well, that was an affluent area. That would be a bed. You could move to Bedford for $750,000 at one time, right?
Like new construction,
right. So what?
Maybe not now, but
obviously not now. So what happened, I guess? I mean, you know this market well. I'm fairly new to the city. I've been here for 5 years, but what happened?
Things have shifted.
Yeah.
Obviously, things have shifted. The values have gone up, Todd. Over the last, 2 and 3 years, we've seen constant growth. And is the price going to continue going up at this level? I don't think so. I think the price is now going to start leveling off.
Right.
But are the prices going down? The realtors are saying the average sale price is down, but that doesn't necessarily mean the price is down. We think that maybe some of the price, the homes that are selling are some of the lower end real estate. So that's why the average sale is lower, because people can afford less due to the rates.
What's lower end? Like 500, 600,000?
Like 300,000.
Yeah.
200,000.
But there's not a lot of those around.
They exist though.
Yeah.
They do exist.
Yeah.
And maybe you have to go, either it's properties that need a lot of improvements,
a lot of work,
or further out of the core.
Right.
They do exist.
Yeah.
I think the average is still somewhere around that $500,000 mark. That's what the average home price is. And coming into the spring, this is what's going to be interesting. Are we going to get into really a seller's market again? Are there going to be more buyers in the market than there are going to be sellers?
Right.
People have hit the pause button. We talked about it in November, even during Financial Literacy Month.
Yeah.
We feel things are slowing down. There are less transactions happening. There's less sales happening. People can't pause forever.
Yeah.
There's an insatiable taste to buy real estate,
Yeah.
but there's a need for housing.
Yep.
Apartments have a 1% vacancy. Buying a home, is it cheaper than renting? In some cases, yes. In some cases, no. But typically, homeownership is an investment.
Yeah.
It will appreciate. Do I think it's going to appreciate at double-digit increases going forward? Likely not. In Halifax, we've had very steady growth over the years, 1%, 2%, 3%.
Right.
We're going to get back there.
Yeah.
We're going to get back to that.
Yeah.
But these new construction that you're talking about, maybe that's the new price, $700,000 for a new construction property. The cost of materials certainly have increased, and that all kind of comes into
it's just interesting though how areas that were the gentrification, I guess, to use that term, of areas and how that elevates everybody, and that's great for me, by the way, in the Spryfield area.
You've done it.
That's right. Yeah.
You've done it.
Yeah.
Right.
Yeah.
And it was the same thing like when you bought your property. It needs some work.
Yeah.
You did the work, and guess what? Now it's
doubled
doubled in value.
That's right. Yeah. Yeah. Exactly.
Right. And a lot of people are in a very similar situation. Some people have done a lot of work to their property. Some people have done zero work to their property. But the market plays a piece here in terms of how properties appreciate, but we can't always just be reliant on the market. Right?
Yeah.
Because now that the market, I think, is going to be more turbulent, i.e., are we going to have as many listings this spring? I hope.
Mm-hmm.
I hope there's a lot of selection, and I hope the market is more balanced for buyers and sellers.
Right.
It was very fast and furious for a long time where there were so many offers. People were bidding way over, like $100,000 over the asking price. I think realtors were listing properties very low with the intention that they were going to get those bidding wars.
Right.
And I don't think it's good for the market. I think having a balanced market makes it easier for everyone. People can put in their standard conditions. We can ensure everyone is protected. We want to protect the buyers and the sellers.
Right.
And for me, I'm in mortgage finance. I want to make sure it goes smoothly.
Right.
And I want to make sure our client, who is a buyer, is going to be protected and getting good advice.
Right. All right, let's talk refinance. When's the environment good to refinance for people as individuals?
I can tell you we are seeing a ton of refinance at Renewal right now, Todd, and a lot are coming out of the Big Five.
Right.
And I'm not saying that we're not going back. I'm not saying that we're not taking those back to another bank in the Big Five. I'm not saying that.
Yeah.
But
You're saying they're leaving the Big Five.
A lot of people that are coming up for Renewal are leaving the Big Five because the rates at Renewal are insane.
Really? What's insane?
Like 1% higher than what's available in the marketplace.
Really?
In some cases more, some cases less.
So what number are you talking?
Like above 6% in many cases.
And they would have been what going in to the refinance?
Well,
three and a half?
Yeah, in many cases, people are seeing rates on the Renewal about double what they were coming out of.
Wow.
So I think, when you're at Renewal, great time.
Yeah.
Regardless if you want to refinance or do a renewal, we can get involved in a renewal, which we call a transfer or switch to another lender with no new funds. That's a transaction that we do as well.
Right.
But I think when you're at renewal, definitely at least check things out.
Yeah.
If your income and the credit and everything's good, check it out. Check it out.
So
I think
so sorry to interrupt. If it's doubled, what does that mean for your payment?
Your payment's not doubling.
No, it's not doubling. That's why.
But the interest cost is doubling.
You're right.
And your amortization is not getting longer.
Right. Yeah.
Right. So I think that's something that can have a significant impact to a household's monthly finances.
Yeah.
And I can tell you, I'm getting a ton of calls. And I just think the pricing scheme with the Big Five, they took on so many mortgages in the last 3 years.
Yeah.
Their appetite is going down.
Yeah.
They want some of these mortgages getting paid out.
Yeah.
So that's why they're not getting super aggressive. Different lenders have different appetites for mortgage lending.
Right.
The interesting thing is there is some legislation changing with the federal government, which means these lenders have to have more funds on deposit to lend out money for mortgages, which means that mortgages are going to become a little bit more expensive down the road when this actually happens. So
what's the time horizon for that?
This is like this year.
This year, yeah.
And now we're talking like a margin of like, is it 5 basis points, 10
but again,
basis points, 50 basis
this isn't necessarily a bad thing that they have that on.
Liquidity.
We want liquidity.
We want the banks to be liquid. Yeah. We want the banks to continue lending, and we want them to have the ability to continue lending.
Exactly.
And we need them. I'm not, saying that the Big Five don't play a very important role with what we do.
Right.
We deal with many of the banks in the Big Five every day. And also some of the trust companies that we deal with, they get their funds from the Big Five. So all of these banks are participating in the mortgage market. If they're debiting your account or not, your funds are coming from depositors from all of these Big Five institutions.
All right, so where do people go if they're not going to the big banks? You've got a lot of other lenders?
Yeah, we have about 40 lenders.
Yeah.
There's trust companies. There's banks that don't have branches. There's credit unions.
Let me ask you this question. Sorry. Are some people almost snobs about this? Do they almost going like, I need a bank. I'm sorry, I can't go with
I hear it every day.
MCO Trust Company. That doesn't. It's like, why do you care once you have their money funded into your account?
Every day I hear it.
Is that right?
And I say, honestly, a couple of our biggest lenders that we do business with every day are the Big Five. I'll tell you why.
Yeah.
We really need them in more rural areas because some of these smaller lenders want to lend in metro. Okay.
Right. Yeah.
So we do a lot of business with traditional lenders.
Right.
A lot.
Yeah.
But that doesn't mean that they have the best price and the best terms.
Right.
typically if you have a fixed rate with a big five bank,
Yep.
if you break that mortgage early, you will pay a bigger penalty than you will if you have a mortgage from a monoline lender.
Right.
The reason being is you're not just paying back an interest rate differential in many cases, you're paying back the spread in terms of what the discount is.
Right.
So that penalty is typically much more. So you need to know that going in.
Yeah.
Some people want to deal with a bank because they're like, if I have a problem, I can just walk into the bank.
Right.
Well, if you have a problem, you can come to us,
Yeah.
or you can call servicing, but you don't normally touch your mortgage that much.
Yeah. What would be the
What
problem?
you do is you touch your checking account a lot.
Yeah.
But yes, guess what? People deal with checking accounts at Simply Financial and all this stuff, and they deal with non-bank lenders.
Yeah.
So although I understand maybe the rationale of feeling more safe with the big five, it's all the same.
Yeah.
They're all federally regulated. All these banks, the money's really coming from the same place.
Mm-hmm.
And sometimes, I'm not saying the rate is the most important piece, but there's a factor between rate and terms and policy and approval and appetite that all factor in to where we potentially will fund someone's mortgage. And relationships change over time, and bank lenders' appetites change over time. I'm thinking of some of the banks in the big five right now that basically almost have exited the mortgage market. Not that they're not doing mortgages, but their rates are just that much higher than other lenders, that their attitude is, we don't want new mortgages.
Yeah.
We want our mortgages paid out because they want more liquidity.
But some people are just straight up traditional, simple as that, right?
Yeah, they certainly are, and that's okay. And we'll do those mortgages, Todd.
Yeah.
We'll do them with the big five. But you just need to understand sometimes that comes with an additional cost.
Yeah, absolutely. All right, so we got one more segment, big exciting segment coming up for you. What do you want to talk about?
I think we're definitely going to talk about what is actually going on with the rates. People are asking me every day.
Okay, we'll be right back.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.